back to the Fourth Revolution. We'll talk about stocks for your portfolio of the future. So we have a stock, it's under the radar, and it just went public last month called Rent the Runway. It is a subscription-based fashion retailer that is allowing women to rent clothes for a period of time, specifically for events. And as we come out of this pandemic, women are wanting to show their colors and their fashionability as they emerge from the lockdowns that we've had over the last 20 months. You know, we've seen a slew of weddings and other social events during the summer, but as we enter 2022, this is really going to take off as herd immunity hits and the pandemic completely subsides. And since the beginning of 2021, you know, going into the first half of this year, Rent the Runway has nearly doubled its number of subscribers, and I expect that to continue, this accelerated growth to continue into the post-pandemic world, with the stock trading at just a mere 5 times forward price to sales, and a slew of bullish analysts initiating coverage in the last 48 hours. I see this stock as a buy today. Despite the super hot IPO market, Rent kind of fell out of favor immediately when it hit the exchanges. And it's because these big money managers, you know, these old men, they don't understand the trends of this digitalizing fashion world, specifically in women's fashion. And when they saw this, you know, quote unquote digital growth company falling off a cliff during the pandemic, as far as subscription goes, they called this thing a sell immediately out of the gates. And I'm sure a lot of this was investors trying to create liquidity. But the stock is now trading under $1 billion market cap. And like I said, we're looking at 5x, if not lower, price to sales right now. But this company, I think, is poised to explode. They doubled their subscription base, nearly reaching back into their pre-pandemic levels as of the first half of this year. And they're coming up to an earnings report in the beginning of December, which should provide a nice springboard for the stock if they can continue growing out that subscription base. So they're improving their margins on a seemingly, you know, annual basis here, with the pandemic really forcing them to push towards operational efficiency, which they haven't done before, and their margins are just exploding out of this pandemic. And Q3 earnings, like I said, should be a nice slingshot price action if everything works out as planned. I see Rent coming to profitability in the next couple of years. And I think once they do have this sustainable subscription base, they will see that same, you know, market multiple that their growth competitors like, you know, Apple, Microsoft, Amazon have all been able to exhibit. So I think the stock is a buy today. We have a bottom here right around 15, it would seem. I mean, that's where we're right about where we're trading at. So I'm looking at price targets between $20 and $30 a share, which, like I said, is an upside between, was it 33% and 100% from what we're trading at today. The margin compressing sell-off that we've been seeing over the last couple of days, with interest rates skyrocketing in the wake of Jerome Powell's renomination as Fed chair, it's creating the opportunity that we are looking for to get into these high growth names like Rent. So take a look at it. Like I said, ticker RENT. And don't forget to check out Zacks.com/promo, where we have a free look at the home study course. Again, Zacks.com/promo. Thanks for watching, guys.